and ongoing worries of economic stagflation. All three major U.S. stock indexes closed lower to snap an earlier rally as U.S. President Donald Trump reacted to reports that Iran was deploying mines in the crucial Straits of Hormuz, with threats of retaliation and renewed calls for Iran's total surrender.
The indexes wavered through early session trepidation as U.S. Defense Secretary Pete Hegseth warned that the U.S. would be the most intense day thus far of strikes against Iran. The conflict has sparked a jump in crude prices, which has fueled worries over inflation against a backdrop of weakening labor market, a toxic combination of rising costs and softening economy called stagflation. But the market remained hopeful that a near-term resolution could be reached, despite an announcement by Iran's Revolutionary Guards that the country would not allow any oil to leave the Middle East until U.S. Israeli attacks ceased, which prompted threats from Trump that he would strike back 20 times harder if they blocked crude exports.
The last 12 hours in equity markets has really been driven by all the news and perceptions of news of what's happening in the Middle East. So when the president came out and said that the war will be over very soon, that gave a lot of confidence to market investors, sent the price of oil down, which certainly has supported equity prices, has impacted bonds. Really, the entire complex is driven by what is happening in the Middle East right now more than any other news out there.
In addition to Trump's prediction of a prompt de-escalation of the Iran war, his administration indicated a potential willingness to end all sanctions against Russia, which eased upward pressure on oil prices, while also raising the possibility of progress toward ending Russia's war on Ukraine. Energy Secretary Chris Roy announced on Tuesday that the U.S. Navy had successfully escorted an oil tanker through the Strait of Hormuz and offered assurance that oil continues to move to the global marketplace. U.S. and Brent front-month crude futures settled down over 11%.